Hi everyone, I'm Bob Durante, and I'm joined by my colleagues Eduardo Alves and Arnold Javero. On December 10th, we had a webinar titled The Uber Problem for the Taxi Medallion Industry. We were overwhelmed by the responses and the questions that you've asked, and we're here to address those questions. So without further delay, we're going to jump right in. The first question, how do we integrate industry risk into CapIQ research? Eduardo.
So as I mentioned during the webinar, the industry risk scores, they're not part of the standard S&P CapIQ online platform, but they're offered separately through our scorecard documentation and guidelines.
Yeah, and you should know that industry risk is really a fundamental analysis, and that's kind of a standard part of Standard & Poor's criteria and also part of the S&P Capital IQ scorecards.
That's right.
All right, next question. I'd like to get your insights on how do industry risk analysis of industries in emerging regions and where there's availability of data is poor.
Right. So for the guidelines that I mentioned that come along with each one of the scorecards include a process that can be followed to score each one of the industries and derive an industry risk score, even for the industries that don't have a pre-scored score. So an analyst can go through the same methodology used for the pre-scores for industries that are not yet included in our documentation, or that maybe won't be included because they're just too small and too specific, or it is a nascent industry,
Sure.
to arrive at just as robust of a final score.
Sure, and I'd just like to add that when looking at the systemic risk, you want to look at both the country risk and the industry risk. It's the combination of those two that help you arrive with those factors that are outside the company's control.
Correct.
All right, next question. Is this uniquely a U.S. phenomena, or are there examples of offshore disruptive businesses and markets?
It's a great question. I mean, it is not just a U.S. phenomenon. There are very good examples from foreign companies that are disrupting their own markets. And to my mind come, I think it's TransferWise for online payments or online money transfers, as well as Spotify, that's based in Sweden. So it is not only a U.S. phenomenon.
Okay, great. Could we say that the disruption that Uber created in the taxi medallion industry applies to the newspaper industry? Well, let me take this one. I think there are some similarities in terms of how smartphones and how being able to access both media and cars using your smartphone. But I think there are differences in that the taxi medallion industry was really a regulated industry. I wouldn't say that was the same for the newspaper industry. So some similarities, some differences.
Right.
What potential factors do you see disrupting the ride sharing like Uber, Lyft, as these are now commonplace locally and globally? Do you think the regulated taxi industry can combat Uber? This is really kind of a big question.
Yeah, I think that's like flipping the coin there. So what could disruptive technologies? Certainly new regulation, as was mentioned during the webinar, regulation could play a huge part into future profitability of Uber specifically. New market entrants or a shift in the strategy from current market participants like Lyft and some other ride-sharing technologies. And also there's a lack of customer loyalty because the service is viewed as a commodity.
Yeah.
So if, let's say, Lyft changes its strategy, its pricing strategy, let's say, I think people will be very inclined to just switch over to another one very fast. And one thing that we didn't touch upon during the webinar is the threat from cybercrime. Because of all these companies are online based, they're more susceptible to online crime that, let's say, the taxi medallion industry.
Sure.
Right? And that could be very disruptive if something were to happen.
Sure. And one thing that we did mention in the webinar going forward from a technology standpoint is the driverless cars.
Right.
So that's down the road, but we definitely want to keep an eye on that as well.
Exactly.
Okay. All right, we're going to go to Arnold now. So we're going to shift from industry risk to medallion valuation,
Okay.
your area of expertise. So it was mentioned in the webinar that the New York City taxi medallion was worth $1.3 million at its peak. What is it worth now, and where do you see it going?
That's a really tough question, Bob. I think the price of the New York City Medallion at this point was reported to be somewhere around 700 to 800,000. This is for a corporate medallion. And I guess the way you get to that is just like any other asset valuation. Basically, you look at projected cash flow, and that is essentially one of the building blocks of where you can arrive at what is the fair price.
Sure.
Right. So that way it'll establish the size of the loan, the rate that you're going to charge, etc. Right.
Still looking for a bottom, though, you think?
I think so, Bob. In terms of, I guess, market saturation, I think that I remembered back in December 2014, Uber's market share was somewhere around 20% of the New York City market, and it was still growing. But there's going to be a point within the market that I believe that there's going to be, I guess, the total number of cars or for-hire vehicles will reach critical mass. And that's the point where probably you'll see some, I guess, type of stabilization. Yeah,
and I think you're addressing the next question that we have is, when do you think the medallion prices will stabilize and at what levels? So you're saying that there's that equilibrium point that eventually...
Exactly, Bob. And I think that it's all going to depend upon a couple of different factors. The thing is, what we came up with, or what we discussed during our webinar, is there are two diametrically opposed operating models going on right now. Right? It's the taxi medallion industry vis-a-vis the ride sharing, and they both operate very differently. But the number of cars that are out there are essentially going to become, I guess, capped at one point.
Okay. And last question, when it comes to medallion valuation, have any banks or credit unions gone out of business because of the deterioration in medallion values?
Yeah. As we pointed out in the webinar as well, Montauk Credit Union was seized by its regulators because of, I think, or one of the reasons is because of their exposure to medallion loans in Chicago. I think there was something around $160 million exposure that they had on their books.
And I think one of the keys for 2016 and beyond are how many other Montauks that are out there. We'll be keeping an eye, and we'll be building a follow-up if that trend starts to emerge. Yeah. Mm-hmm. All right. So the next category, we're gonna move into kind of what we're calling credit analysis, and we have a few questions. And first one's going to go to you, Arnold.
Okay.
Do you know what methodologies financial institutions, medallion lenders are currently using to value taxi medallions?
I don't really know what banks are actually using in terms of underwriting criteria, but I would imagine it would be a combination of assessment of borrower, maybe an asset valuation, figuring out the type of cash flows that the medallion can actually earn, and certainly a market analysis, right, of what current prices are, and basically where they can project where they're going to be going in the future.
And I like this next question. Should have financial institutions paid more attention to borrower cash flows and less attention to collateral asset values? So more focus on the PD versus the LGD, if I will.
Okay, that's a fair question. I don't think it's a matter of one over the other. I think it has to be, the analysis should be in tandem, right? Certainly I would have asked, well, the asset valuations are increasing, but then ask why. And I think that would eventually have led me back to the asset cash flows. So it must be a much more robust, much more holistic approach.
Sure. I mean, from my perspective, I believe that you should focus separately on PD and then separately on LGD, and that allows you to come up with your overall analysis.
Yeah, absolutely, Bob.
Okay. So next question. This one's going to go to Eduardo. You mentioned risk appetite would be a factor in determining out whether a bank would extend a bank loan for medallion. Do you think that ever making high-risk loans, or is that a role for alternative asset managers?
Tricky. So, as Arnold mentioned about the underwriting standards at banks, there was a really big push by recent regulations to improve the underwriting standards at banks, as well as improve capital levels. This forced banks to look at risky loans in a different way, and allowed other market participants that are not under the same regulation to originate a lot more of these risky loans. I don't think this was a complete shift in operating practice by banks. It's more of a disincentive by regulators on the banks. So I did mention during the webinar that I wouldn't shy away from it completely, but it would have to fit within my overall risk position and risk appetite.
All right, good insight, thank you.
Yeah, and also I think every portfolio probably has to have some kind of element of risk, but then also you have to figure in, well, am I getting paid for the risk?
Exactly.
Right?
Exactly.
Very good. All right, this one's for Arnold. What initiatives, if any, are Medallion lenders implementing to provide relief to Medallion owners who are in financial distress and at risk of default? Are there moves to write down loans or otherwise assist struggling Medallion owners?
That's a good question. I think in the papers there have been, I guess, lobbying in the Boston market and I believe Philadelphia. I'm not sure. However, what they're trying to do is trying to claw back a little bit of the equity value that Medallion operators or owners are trying to claw back some of the equity they lost as a result of the depreciation in prices. However, I think the outcome was not in their favor. But in terms of other things that I've heard is that people are asking maybe or questioning maybe the possibility of write-downs and I guess government subsidy to help underwater, so to speak.
Is it a fair parallel to look at the housing crisis and mortgages that are underwater? The same thing with the Medallion owners, where the loans are just way more than what the collateral is worth.
No, I believe so. And certainly, the dynamics are certainly very, very much the same.
Okay, great. All right, now we're going to shift to our next category, peer group selection. So when we did the webinar, we did some case studies. We ran several banks through our scorecards. We got a lot of questions about how we chose our peers. So we're going to try and address those right now. We're going to start off with the first one. Why didn't we include Progressive Credit Union? And Eduardo, you chose the peers. Help us out.
Right. So I think we can probably address the next 4 questions the same because we got these questions asked about Progressive Credit Union as well as Medallion Financial.
Sure.
And why didn't we include those? So the reason why we didn't include the Progressive Credit Union, it was really just because of a lack of data to run it through our automated part of the model.
Sure.
For multiple years. We had enough data for some of the years, but not for all the years, so we decided to eliminate it from the sample. And for Medallion Financial, it was really just because they already divested all of their New York City tax medallion exposure. And they're already in the process also of divesting a lot of their Chicago exposure. So we decided not to include it.
Okay, very good. And then that brings me down, any thoughts on specialty lenders? We did notice when we were doing the research, like in the case of Montauk and like other credit unions, there are institutions that specialize in lending to taxi medallions. The one thing that we discovered in our research and was frankly alarming is that there is some loopholes that allows banks to concentrate their lending in this niche part of the market, and I think that's it's getting some of these institutions in trouble. So it goes back to one of the main lessons learned from the webinar, that it's important to diversify, and as you said, Arnold, diversify and then again diversify.
Absolutely.
That was very important for the credit unions.
Yes.
The commercial banks were better diversified, as you mentioned, but especially for the credit unions, that loophole certainly played a key part in why they are so concentrated today.
Thanks for filling that in. It's compounded by their smaller size too.
Right. Exactly.
Okay, so now we're going to shift to the next category, regulation. So the first question's coming to you, Arnold. How did Uber circumvent the licensing requirement? Was there ambiguities in the regulatory framework, and what were we? I know we touched on this in the webinar, so it is an important question though.
I think that there were no ambiguities in the regulatory framework, and in fact, it was the explicitness of the regulations that essentially allowed Uber to penetrate the markets. I mean, as we alluded to in the webinar, specifically Uber is categorized as a transportation networking company, not a taxi franchise.
Sure.
So, and all the regulations, all current regulations explicitly look at or govern the taxi industry. So I think it was a matter of, the regulations and the policies being very, very explicit.
All right. Great.
And not being able to sort of expand their oversight.
Very good. So how about the limo and sedan services? Do they need a medallion to operate?
No, they don't.
And why is that?
Well, essentially because the Taxi and Limousine Commission here in New York doesn't require one at this point.
Yeah, one key distinction is that limousines, black cabs, they're not allowed to pick up passengers on the street. So passengers cannot hail a black cab or a black car or a limousine on the street, while they can just hail a taxi.
Yeah, right. Very good. So this next question, will regulatory restraints begin to restrict Uber's growth? Well, that's really one of the fundamental questions that we discussed at the webinar. And I think everyone on this panel has a difference of opinion about what that is. And it was actually one of the poll questions that we asked. My personal opinion about that is that I think, like you were suggesting, Arnold, at some point there has to be that point of equilibrium where you have to have some limits to the number of drivers. It just can't go on completely status quo. But that, again, that's just my personal opinion. I really don't have a crystal ball, but again, this is something that we'll keep an eye on. Right. When Uber is forced to comply with regs that the taxi industry must follow, will their impact profitability shrink? It's a similar question. We just addressed it. What are your thoughts on that, Eduardo?
Yes, it would. I think especially eventually when regulators catch up with not really a loophole, but maybe just they're able to expand their reach into ride-sharing technologies, I think they will diminish their margins. And it could potentially, based on court cases, potentially increase the liability side of some of these companies, also again putting pressure on their margins. And one way that I like to think about why is Uber so successful today, how is so profitable, you can really think about it as an arbitrage opportunity in the market that's based on regulatory differences instead of price differences. So once these regulations start to level off, the arbitrage opportunity diminishes and you no longer have that much profitability.
I like that. Right. Very good. So the next question is, do you think regulation will kill this advantage? I believe we just kind of addressed that in the last sets of questions.
Right. Again, the market is very dynamic, and innovation will keep Uber and other ride-sharing companies in the market as long as they can innovate, right? So anyone that doesn't innovate, anyone who cannot innovate, they will fail, right? And we've seen that before. Multiple companies who were very, very large, they never innovated. There were a couple before, like Kodak, right? And
Barnes and Noble.
Barnes and Noble. Well, sure, yes. I think we can come up with quite a few numbers. So I don't think Uber is set up to fail depending on regulations, but they will have to adapt to new regulations.
Sure. Okay. Right. So the next question, back to the regulatory environment. Municipalities receive significant revenues from taxis like licensing fees. Do you feel that municipalities will seek to recoup these revenues by taxing Uber? I'll take this one. I'll put my public finance hat. So I'll break it down. Will they try and seek to get revenues from Uber? Yes, they will try and seek. Will they be successful? I think that's the harder question to answer.
Right.
My instinct says no, but it's something that we should keep an eye on. And again, as this story evolves over 2016, it'll be one of the themes that we could follow up on. But great question.
Yeah.
Do you think municipal governments will attempt to extract additional fees from Uber? So it's basically the same question. So the next question. New York City has tightened controls in the Uber industry. Try to tighten controls. How successful do you think they will be? So that's
I know that both the mayor of New York City and the governor of the state of New York are actively looking at options to limit Uber's operations, right? How successful they will be, again, I think it's too early to tell, because it's very initial stages. I know that the city of New York is working with some consultancy company to come up with a report, which is due shortly, I believe, in the coming weeks, about the impact of Uber on transportation cost, on the traffic in the city, and all that. They're going to try to use this as ammunition to try to curb Uber operations in the city. But how successful it's going to be, I don't know.
Yes.
Certainly, it's going to be a long battle because Uber has tremendous legal resources.
Yeah.
Okay.
So.
I think for additional context, it's worth noting that New York City taxi medallions, I believe, is 13,000. But then when you look at the number of Uber drivers, it's upwards of 30,000.
Right.
So
Exactly.
it's just overwhelming. So it's just if that 30,000 becomes 50,000, then I think that that could potentially be a game changer. If it kind of stays around the 30,000, I think that might be the equilibrium point that we were talking about.
Right, and also I want to add is that essentially the New York City legislation or the moves that they're trying to make are to curb Uber's expansion. But in actuality, the problem isn't just Uber's expansion, but also to come up or arrive at a good point where the total number of vehicles is at the right point, basically matching current rider demand. So I think what will happen is in New York City is that it'll be it can't just be a one-sided affair where you're regulating or imposing new regulations on Uber. I think it has to be a regulation change across the whole industry.
Is there a formula that can come up when you take the ridership versus the number of the cars? What is that number?
Oh, that's a tough question to ask, and I have to put my thinking cap on and turn on the Excel and do a lot more research.
But does it exist though? Can it be formulaic?
I believe so.
Okay.
I certainly believe so.
Okay.
I mean, there's certainly estimates out there, and there's some good market research. I believe so.
All right, great. So we're gonna shift to. We did get a single question on taxi operations, which I think is an important one, and it's going to be for you, Eduardo. It looks like a multi-part question. So, what can the taxi industry do to make cabs the more attractive alternative to Uber rides, in turn raising the value of medallion prices, establishing a rating system, using cash or cardless payments, lowering fares, including gratuity? Any thoughts about making the experience better as you take a taxi?
Right. So during the webinar, I was one of the advocates for loosening the cap, the hard cap on the number of medallions. I think that's certainly a beginning. That'd be very good. And also improving service. Improving service and allowing people to maybe, for example, rate drivers and cars the same way they do with ride-sharing companies.
Okay.
You can just rate how was your experience,
yeah.
and somehow that would, screen for good and bad drivers, and allowing to like mobile hailing. I know they already came up. The taxi medallion industry already came up with some mobile apps for hailing taxis and for paying. I don't know how well they're operating right now. I don't know any statistics on this yet. But if those can be improved and implemented well, certainly can take away a little bit from Uber.
Level the playing field.
Exactly. One big advantage that the taxis do have over ride-share industries is that the practice of charging more during rush hour or when it's raining or doing after a large concert. Yeah. Uber charges more during those peak hours, peak times, while the taxis are not allowed to do that. Right? So that's one big advantage for the taxis during those times. So if they're able to capitalize on this, it's also something that would improve their standing.
Yeah, that brings up a point that recently in London, where, essentially what I do now is always interview my driver no matter where I am. So either I ask an Uber driver or a taxi driver certain questions about how is business. And in London a couple of weeks ago, I asked a driver, how do you what's going on in your market and what's going on with Uber? And essentially the driver or the black cab or the limo driver said to me, it's a very difficult situation. I mean, at a point, Uber ends up becoming more expensive, to your point of the surge pricing, more expensive than the existing means of transportation or existing services. and they're actually losing business.
Okay.
So, and people are opting to go with the old ways.
Right.
So
Yes.
certainly, I think you're right. It's that surge pricing that
Right.
is, or that is sort of.
Yes, I
hurting
mean
them.
the whole idea behind that is just a convenience. Is a convenience fee that you pay. The demand goes up so much during peak hours that Uber is able to charge 2 times, 3 times, even up to 6 times what a regular fare would be.
Yeah.
6 times.
Yeah, I think even more than that.
Okay. All right. So we're in the final category, and it's Uber operations. So what is Uber's current market share in New York City taxi market, Arnold?
I mentioned earlier. I think I don't have the exact numbers right now, but back in 2014, estimates were around 20% of New York City, and still growing.
Okay. So last question. On the horizon, who wins, Uber or regulation? Eduardo?
Well, I'm a market guy, so I say the market always wins. So either you innovate or you lose, and that applies to both ride-sharing companies or taxi medallion industry.
Huh. It's a tough question. I think on the horizon, who wins? Essentially, the riders win, right? Because there was a scarcity of cabs, vehicles, a limitation on alternatives. So I think right now, the biggest winner are the riders.
All right. I have to go with Uber too. I am a market guy. I think there is a point where regulation has to get brought in and there has to be some caps on the number of drivers. But I think Uber has so much momentum globally, I don't see that stopping. And that's all today. On behalf of the team, thank you for listening.